Good morning, good afternoon, or good evening, ladies and gentlemen. This presentation is an executive briefing for DZD Consulting Services on relocation trade-offs in United States metropolitan and micropolitan markets. The purpose of this project is to help DZD Consulting Services think through where property service companies should focus their expansion efforts. Instead of looking only at where people are moving, this model looks at where relocation demand overlaps with affordability, housing condition, infrastructure limitations, and service needs. The final recommendation is a market screening approach. The model is not meant to perfectly forecast migration. It is meant to help the consulting service identify which markets deserve deeper local research. The bottom line is that DZD Consulting Services should use a regional first relocation screen. The data does not support chasing the cheapest markets alone, and it also does not support chasing the fastest growing markets without context. The strongest opportunity is where three things overlap: region, affordability, and service gaps. That means DZD Consulting Services should first ask where relocation activity is concentrated, then ask where the market has moderate affordability pressures, and finally ask whether owning housing or infrastructure issues create property service demands. So the recommendation is simple: screen first by region, then layer in affordability and service gap indicators. Now, the client decision is: where should property services companies focus their expansion efforts? For DZD Consulting Services, this is not just a population growth question, it is a business demand question. If people are relocating into a market, they may need repairs, maintenance, plumbing support, waste services, contractors, and other local property services. But not every growing market is equally attractive. A market may be growing quickly, but already expensive, constrained, or difficult to serve. Another market may look cheap, but have weak demand drivers. This is why the screen uses three stages: region, affordability, and service gaps. Now, our analysis uses the 925 U.S. core based statistical areas, which include both metropolitan and micropolitan markets. The outcome variable is the net domestic migration rate for 2024 through 2025. In plain language, that measures whether a market is gaining or losing domestic movers relative to its population. The predictor families include affordability, owner cost burden, housing condition, plumbing or infrastructure gaps, and census division. That gives DZD Consulting Services a broad screening model. It does not rely on one single factor like home price or population growth. Instead, it connects relocation demand to the market conditions that can create property service opportunities. The earlier hypothesis test showed that relocation is concentrated, not evenly distributed. The goodness of fit test showed that migration patterns do not follow a simple, normal, or uniform distribution. The proportions test showed that elevated growth markets are regionally concentrated. The independent test showed that migration category is associated with affordability category. The business meeting is important. Relocation opportunity is not random, and it is not spread equally across the United States. That supports the regional first screen. DZD Consulting Services should not treat all markets as equal starting points. The first layer of model should be geography. The final regression model is model number 6. Model number 6 predicts net domestic migration using census division, moderate affordability pressure, owner cost burden, older houser share, and plumbing gaps. This model was selected because it balances three things: statistical strength, simplicity, and business relevance. The initial model had more variables, including overlapping affordability measures. Through refinement, the final model kept the variables that were most useful for decision making purposes. The main story is that migration is not explained by affordability alone. Region matters, moderate affordability pressure matters, and service gap indicators matter. Model 6 is statistically significant overall. The R square is 0.233 and the adjusted R square is 0.213. The S statistic is 21.83 with a p-value less than 0.00. The residual standard error is 6.67. For an executive audience, the key point is this: the model is useful for screening, but not exact forecasting. And adjusted R squared of 2.213 means the model explains part of the variation in domestic migration, but not all of it. That makes sense because people relocate for many reasons not fully captured in this data set, such as jobs, climates, taxes, insurance, amenities, family networks, and local municipal policies. So, DZD Consulting Services should use this model to identify leads and risk, not to make final expansion decisions by formulae alone. The coefficients tell us how each factor relates to predicted migration, holding the other variables constant. Moderate affordability pressure is the clearest positivity signal. That means markets in the middle affordability range perform better than simply choosing the cheapest or most expensive markets. Owner cost burden has a negative relationship with migration. As the cost of ownership rises, prediction migration tends to fall. Older housing also has a negative relationship as well. This does not mean older housing is bad for property service companies, but it may reduce relocation appeal if the housing stock feel outdated or very costly to maintain. Plumbing gaps are also negative, which suggests that infrastructure limitations can reduce migration appeal as well. Finally, region matters as a group. Census division is not just background geography, it adds explanatory value to our model. The residuals are one of the most useful business outpoints learned from our regression. A residual is the difference between actual migration and predicted migration. Positive residual markets perform better than the model expected. These are hidden growth leads. Examples include Jefferson, Georgia, Ocala, Florida, and Punta Gorda, Florida. These markets deserve deeper review because they are gaining more domestic movers than expected based on our model prediction. Now, negative residual markets perform worse than expected. These are risk review markets. Examples include Key West, Key Largo, Florida, State College, Pennsylvania, and Rexburg, Idaho. The key point is that residuals are not just statistical errors for the consulting service, they are market intelligence. They show where the model is surprised, and those surprises can become the next layer of research. The final recommendation is a stage screening process. First, screen by census division because region adds explanatory power. Second, prioritize moderate affordability pressure rather than assuming the cheapest markets are automatically the best. Third, layer in older housing and plumbing or service gap indicators. Fourth, use residual flags for deeper local research. Now, our future upgrade is a basic employment index that would add an economic based layer by identifying markets supported by export serving jobs. This will help separate growth markets with strong job engines from cheaper markets where weak basic employment may limit its demand. The operating principle is screen first, investigate second, and forecast with caution. That gives DZD Consulting Services a practical model for deciding where property service expansion deserves closer study and scrutiny. Thank you.